Good afternoon and welcome to Tech Trends on BDTV. I am Boluwatife Omotayo. Today on the show, we're doing things a little bit differently because we have a guest. We have a guest who would come talk to us about access to credit for Nigerian businesses, entrepreneurs, and startups alike. We have today Oluseye Sheton, who is the co-founder and chief growth officer at Vendor Credit. At Vendor Credit is a supply chain fintech and fulfillment partner on a mission to deliver holistic, seamless, and embedded scalable supply chain solutions. Hello, Oluseye. It's a pleasure to have you here today.
Thank you for having me, Tifa.
Okay, thank you so much for joining us today. Now, so we don't waste so much of our time, let's get right into it, right?
Sure.
Good. So, how would you describe the current state of Nigeria's tech ecosystem?
Well, the Nigerian tech ecosystem is still on a growth trajectory. I think we're just basically coming out of a funding winter, which kind of spanned over the last 2 years. I think in terms of investments that came in, 2023, I think was about $389 million. And there was a slight increase of just a little over $400 million in 2024. I think the last 2 years also, in terms of mortality rate of fintechs, was probably the highest, with a lot of fintechs going under. And that's obviously as is consequence of the funding winter that they had experienced, and obviously lack of product and market fit. And some also went down because of the challenging and harsh macroeconomic conditions that we faced over the last 2 years in Nigeria. But there were still some bright spots. I think MoneyPoint was a fintech that achieved unicorn status, and there was a lot of consolidation and acquisition in the space as well, where bigger and more stronger and well-funded fintechs were able to acquire those that were not able to, meet their day-to-day obligations. But if we're just going to summarize all of it together, I think it was a challenging year. It separated the boys from the men, those that had value in the market from those that didn't have value in the market. And I think the ecosystem would only grow stronger if you're able to make it between 2023 and 2024 as a fintech, then there's some level of validation into the solution you're offering in the market.
Thank you so much, Oluseye. I really liked what you said about fintechs who have stuff will be the ones who would survive the coming years. Thank you so much for that. Now let's get right into the major conversation for today, access to credit. Now, access to credit has been one of the most challenging issues for businesses, founders, entrepreneurs in Nigeria today. Now, what barriers do you see that are preventing small businesses from securing financing?
Well, there are a lot of barriers.
Okay.
I think the first one is the fact that the risk of the small businesses is not adequately captured. And that's obviously because there's little information, right? Or little transferable information that capital providers can use to be able to build the risk profile of the small business. And the reality is that the information is out there because these businesses do transactions on a day-to-day basis. But the challenge is that the information is not centralized. It's fragmented. It's spread across different facets and data points. So the challenge would obviously be being able to aggregate that data together in one place, use all that data to be able to form a risk opinion or a risk picture or profile of the small business. And once they're able to do that, they can now determine how to mitigate each of the risks that they identify, right? And then off the back of that, if you've been able to identify and mitigate sufficient risk, then you're in a position to now make funding available to fund the opportunities that those small businesses are going for. So there's that challenge on one side. There's also the issue of because for me that's the core problem. Every other thing now turns out to be a symptom.
Secondary.
So in trying to determine the processing time that they take in trying to give them credit is also a function of the fact that they don't know what it is that they're supposed to be looking for, right? The complex terms and conditions is also a function of the fact that, they don't have a clear picture of the risk that they're taking on those small businesses. So I think there are a lot of symptoms, but the core of it for me is the fact that we're unable to profile risk appropriately because we're looking at either traditional data to be able to build that risk profile.
Thank you so much, Olusheye. So I think, as you've said, it's from the inability to profile these startups appropriately. Now, I'd like to ask, what is your startup vendor credit doing to bridge this gap? How are you doing things differently to be able to bridge the gap of credit in Nigeria?
All right, great. So I think the first thing we're doing is gather information on the SMEs, whether it's from the traditional sources like bank statements primarily, right? And also looking at alternative data as well in terms of maybe things as simple as what platforms you're selling on, what your return history is like on those platforms, your mobile phone usage, and a couple of other data sources that exist out there, right? To be able to build an appropriate profile. All right, so the first one obviously is be able to use traditional and non-traditional data to be able to capture the risk on each SME and be able to build a proper risk profile for them. What we're doing next, obviously, is we're also trying to identify those risks, be able to mitigate against those risks. Thirdly, we're changing the model in which businesses access capital. The traditional method is you always have to go to the capital provider, right, to be able to access capital from them, and basically you submit to their terms and conditions. And what we are doing at Vendor Credit is marketplacing it out, such that at the end of the day, there's information available to both parties, both the vendor, right, on the capital provider and the terms in which the capital provider will be providing funds for them. And on the same side as well, the capital provider has a clear risk profile of the vendor that he wants to fund. And both parties now have a variety of choices in which they can pick from. So what we're doing ultimately is reinventing the lending experience, right? Or the capital access experience in such a way that it's fair to both the capital provider as well as the SME that is intending to access capital. And that's what we're doing differently at Vendor Credit.
Okay, thank you so much for that. Now, I have a question to follow up for that, but let me just give you this data to serve as background. Now, according to the FCCPC, there are 380 digital lenders in Nigeria today. Now, first of all, what is driving this growth? Also, what has the uptake been at Vendor Credit?
Well, to answer what's driving the growth, there's a huge funding gap, right? In supply chain funding alone, IFC estimates that there's over $6.6 billion worth of funding required, right? That's just in supply chain financing. I think if you look at the statistics of credit penetration in Nigeria, I think the figures are about 9 out of 10 people that go and ask for loans get rejected. So the question is, where do the other 9 go? And that's the gap that the 380 plus fintech lenders are trying to fill. So if that opportunity clearly exists, and I'm sure if you throw in another 300 in, the markets will be able to accommodate that demand. And for the second question on, what I think the question was on differentiating, correct?
On the uptake at Vendor Credit.
Oh, so on the uptake at Vendor Credit, it's been phenomenal. We've grown in multiples year in, year out, and year on year. And this is obviously on the back of the fact that, within the space we've chosen to focus in, which is supply chain finance, right? The opportunities is expected to grow at about 8.4 compound annual growth rates. And that was as a 6.6 billion as at 2022 when the survey was done by IFC. So on our side, off the back of the value proposition we're rendering and offering, as well as the seamless experience we're providing for our customers, and would-be lenders, we've seen uptake go up significantly. And it will interest you to know that on the non-performing loan side, which is one of the biggest challenges that the industry faces, we are well below 5% when it comes to NPLs in an industry which is rumored to have an NPL of over 40%. So I think what the market has done for us in vendor credit is be able to validate the process as well as the innovation that we're bringing and value that we're bringing into the marketplace.
Okay, thank you so much. Now, I think we should move on to something about financial inclusion. Now, I know you've said that most times businesses are cut off from credit funding because of the assessment criteria, right? Their profiles are assessed, and these assessments may not be suitable for each startup or business. So, but what can you tell us? What effect can this have on financial inclusion?
I mean, financial inclusion there are two levels to look at it from, right? There's the fact that we have, I think last number I saw was over 70 or 60 million BVN users, right? That are within the system. Now, the challenge is out of the 60 million, if you ask what percentage of them are actively using their accounts, you realize it's a very, very small percentage. So which means that even those that are financially included, right, there are a lot of them that still remains, a large chunk of them are underserved, right? True. So what we are trying to resolve at vendor credit, obviously, is start from the points where we're trying to serve those that are currently underserved, because in a way, they are also financially excluded. They are registered, but they are not counted, if you understand what I mean. So what we're trying to do is to deepen the level of financial services that are consumed by even the ones that are, considered in quotes to be financially included, right? Okay. And from there, we would now see how we can tackle that. And there are other opportunities where we can now start looking at the other people that are currently out of the financial brackets. Now, for the guys outside the financial brackets that are, completely termed as financially unincluded, right? I believe the way technology has to go, right, is that you need to be able to provide them with solutions at the level of technology that they have access to. Sure. We take it for granted that in Lagos, for those of us that are in the major cities, Lagos, Abuja, Port Harcourt, and the rest of them, 5G is given. But there are parts of the country where they don't even have 1G, talk less of 5G, right? There are parts of the country where WhatsApp is a luxury. They need to do distance before you can access those kind of things. Matter of fact, there are even parts of the country where access to cellular data is a challenge. So we need to reinvent or rethink around. Innovation is not only driven by technology. We need to think about innovative ways in which we can ensure that these guys also have access to the financial tools that they need to also grow and thrive.
Thank you so much for that. Now, let's talk a little bit different from credits, payment, and all of that. We know artificial intelligence has been co-opted into sectors. Different sectors now use AI. Now, beyond being an AI startup, you can also co-opt AI into your operations at your organization. Now, tell us, how has vendor credit been able to co-opt artificial intelligence into the work you do, bridging the credit gap?
Oh, yeah. When I mentioned earlier, first of all, that's a great question. When I mentioned earlier that, in trying to access data points, to be able to build the customer profile, right? We're using AI tools to be able to extract data, scout for data, right? And bring it in to be able to assist in building the credit profile for the customers that we have. We use AI tools as well to be able to analyze that data and fit it into the algorithm that we've created, right? Okay. Which enables us to create a score that we now share with the capital providers. Okay. And then we also use AI tools to continue to learn, right, on the data that has been provided and fine tune on our algorithm and scoring processes, such that at the end of the day, the algorithm itself is not static, but is more reflective of the volume of data that it continues to get. So that at every point in time, we're having a clearer and clearer picture of, the SMEs that are requiring funding, as well as clearer picture of even the investors, right, that are looking to fund the SMEs. We're also using AI to match. So when you have a SME that has a particular risk profile based on the ratings that we give to them, we are able to match them with the appetite of the investors so that they don't spend time looking at transactions that don't fit within what their risk appetite typically is. And we're using basic ones like even chatbots on our website just to ensure that customers are able to engage and learn more and more about the services that we render at vendor credit.
All right, thank you so much. Now let's go a little more personal. Now you've been deeply invested in Nigeria's business ecosystem. What is your long-term vision for Africa's digital economy, and how do you see your startup vendor credits contributing to this future?
I mean, so we all know the future is digital.
Definitely.
And you can't, going at current trajectory we're going at, we know that, anyone who chooses to look away or put their head in the sand does so at their own peril. So having said that, the future of Africa is digital. Africa still has the youngest population in the world, and the bulk of activities that are going to be happening around the world is going to be domiciled within the continent. And so if you're looking at it from that perspective, strongly Africa will become the digital epicenter or the digital utility market, utilization market of the world going forward. Now, when you look at it from that perspective, things like everything it is that we typically do today, financial services such as lending, payments, investments, all those kind of insurance, health care, all those things are going to move to digital platforms, and that's the direction of the future. So what vendor credit is doing is looking 10 years ahead and telling ourselves that who are the businesses or where are the platforms, right, that have the potential to transform Africa within this 10-year time frame, and trying to identify them very early, trying to see what needs it is that they're facing now, what problems it is that they're hoping to solve going forward, and looking at how we can partner with them, right, bring in our seamless, embedded, and scalable and innovative solutions, right, to be able to assist or to partner with them towards achieving the goals of transforming Africa. And that's what we're doing at Vendor Credit.
All right, thank you so much. Now, finally, just because of our time, what tech solutions do you think will make the most impact in 2025? I mean, what solutions do you think businesses, entrepreneurs, startups, even individuals would have the most use of in this year?
Well, 2025 is a very short time frame, right? I'm sure people will say AI, but I don't think in terms of, especially when it comes to data in Nigeria, AI is probably going to be more longer term than short term. But the solutions that I feel would be a game changer is more along the lines of infrastructure as against software. So in terms of being able to ensure, there's a policy that the Ministry of Technology and ICT primarily is putting out around broadband access. So I think the most impactful innovation right now, or the most impactful move that needs to be made is expanding access to broadband by creating infrastructure that allows many more people, especially guys that don't have access to the luxuries that we enjoy in places like Lagos, right, be able to have access to it. Farmers in far areas like Otangwa and Yahia and all these other places that they don't have access, right, to internet services. I believe that infrastructure provision is a key thing that needs to be provided on that front. And then I see on our own side at Vendor Credit, we believe strongly that embedded finance is also going to be something that is going to be critical, because it's going to change the current approach in which people access credit, and it's also going to ride off the back of broadband infrastructure and access.
Thank you so much, Olusheye. It's been an absolute pleasure having this conversation with you. And I believe that beyond, even at Vendor Credit and beyond, I believe that we can work together to close this credit gap, because at the end of the day, these businesses would form the lifeline in the coming years. So it's important to give them access to credit to enable them to scale at different levels that they wish to. Thank you so much, Oluseya. It's been an absolute pleasure talking to you. Bye for now. All right.
Thank you, Tifa.
It's been a good time speaking about access to credit, and I believe that the solutions that were provided would be taken into cognizance by all. And I also expect that in the coming months, in the coming years, we see that the credit gap is reducing largely, and startups and businesses are able to take advantage of the tools, the developments that are coming into the credit ecosystem. It's been an absolute pleasure hosting Tech Trends on Business Day Television today. I remain Boluwatife Omotayo. Thank you.